Hello and welcome. I'm Matthew from Rosie and Rosie, investment property specialists, helping you invest in property with confidence. Today we're with award-winning mortgage broker Alex Filipovic from Nectar Mortgages. Good morning, Alex.
Morning, Matthew.
Welcome, Alex, and thanks for joining us. Alex, it's the first Wednesday of the month, and yesterday, as they do every month except in January, the Reserve Bank announced the cash rate. Today I wanted to talk to you about what was announced and what the banks have done in response. So, Alex, can you tell us what happened yesterday with the monetary policy decision?
Yeah, well, basically the cash rate was unchanged at 1.5%, which was no real surprise considering the inflation rates not going up or anything like that. So that's what I expected, and I don't really think rates are likely to change for a while yet anyway. So yeah. And as far as banks are concerned, well, the cash rate doesn't seem to have the same effect as it used to have. As you may be aware, back in 2016, when the Reserve Bank started dropping rates, the banks didn't pass on all those cuts. And since then, we've had a tightening of lending for investment borrowings, and we've seen banks increase rates out of cycle. So a lot of clients ended up with increased rates, irrespective of what the Reserve Bank's been doing. So, so really, the cash rate, the average borrower is no better off with the rate staying as it is. Probably worse off than the last couple of years.
Yeah, we've seen the cash rate has had less of an impact on lending as the rate has reduced, and so we've seen the APRA
clamping down
on things, and that's probably had a greater impact while the cash rate has been as low as it has been.
Yeah, I mean APRA basically wanted to restrict lenders to 10% of their book to be for investment only, and also their interest-only loans to be restricted to 40%. So that's given the banks an excuse to lift rates for existing clients, which probably wasn't the idea, but that's what's happened. That's the consequences of that decision. So it's and I believe the banks have some lenders have increased their rates several times over that period of time.
Which is what I was going to ask. But the big four are not the only lenders in the market. Alex, tell us who else is on your radar offering competitive rates and terms at the moment?
Look, there are small regional lenders out there, regional banks that the average person wouldn't be aware of. They don't have branch networks, so they rely on the brokers and they are very competitive, and they are probably forcing the bigger lenders to cut back their rates a little bit and review their rates because they are slowly losing market share with the brokers now providing over 50% of mortgages. It's becoming more competitive, and those small lenders are having a big impact on rates. And I'm finding that I'm using them quite a bit these days.
And you can only access those through brokers like yourself.
Well, basically, yeah. I mean, some of them, are based interstate and don't have branches yet. So a broker can also assess the most suitable loan too. Some of those regional banks are offering very similar rates, but there are different conditions in some of those loans.
I know you have a client that you're working with at the moment who you've moved over onto such a lender. Can you tell us a little bit about that?
Yeah, well, she's got two investment loans. They are both interest-only loans. Rates were in the high fives. So I've switched her across to one of these regional banks. Now, we decided to switch her across to principal interest because the rate she's getting, she's saving close to 2% in interest, and and putting her on principal interest also will help her with a financial plan in the future. And the savings are about $475 a month in interest alone. So that's the reason. I mean, there's nothing wrong with investors having interest-only loans, but if you start looking at the benefits of perhaps looking at principal interest and it's affordable, then with savings like that, you just can't ignore it. It's quite significant.
So that's probably one tip that you've got. Do you have any other tips specifically for investors looking for funding or refinancing at the moment?
Look, if anyone hasn't reviewed their loans for the last 12 months, you should have a look at getting a better rate.
Yep.
As I said before, lenders increased their rates now that some of the lenders have actually got their investment balance correct. They're now starting to reduce their rates. So there are some quite competitive rates out there. So it certainly would pay to have a look at refinancing, because the lenders are not reducing the rates for existing clients, but they're just offering the reduced rates to new clients with it. I don't think that's correct, but that's the way it's done. And there could be quite significant savings. And also have a look at the benefits of a principal interest loan, because those rates are still cheaper than interest only. The difference isn't quite as much as it was, say, 6 months ago, but if you can afford a principal interest loan and it's going to reduce the loan term and give you more equity, well, we're worthwhile having a look.
Yeah. So if you haven't reviewed your rates or your mortgages within the last 12 months, now's a good time to get in touch with a mortgage broker. Alex, thank you for joining us today. But before we go, can you tell us how people can get in contact with you?
Well, they can contact me by phoning me on my phone number. It's 0411 87580, or sending me an email, which is alex.filipovic@nectarmortgages.com.au.
Which I'll put in the description.
And yes, they can search me to Alex and Pauline at Nectar Mortgages. They'll find us on the internet as well if they do.
Great. So, thank you again for your time this morning. We hope you found Alex's insights to be helpful. If you have any questions for Alex, I'm sure he'd only be too happy to hear from you. Similarly, if you have any questions, queries or feedback for us, please send them in, comment below, or email hello@rosieandrosie.com.au. We'd love to hear from you too. It's been a pleasure having you with us, but it's time for us to go too. Until next time, I'm Matthew from Rosie and Rosie, helping you invest in property with confidence.